Good morning. It's Thursday, July 31st, last day of the month here. Quite a wild action here in yesterday's trading. So I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So let's take a quick look at the price action overnight. Gold, silver, copper, kind of digest a few things going on. While the U.S. equities, well, the NASDAQ surged after results on spending coming from Meta, coming from Microsoft, confirming that the AI trade is here to stay. That's helping traders kind of overlook some of the last minute tariff curveballs and the more hawkish tone from Fed Chairman Jerome Powell. And it was the tariff curveball, especially in the copper market, and also the hawkish tone from Jerome Powell, which is really impacting those metals markets that many of you trade in. So we look at the gold market. It declined about 1.5% yesterday in the previous trading session. Now today, December gold futures sitting right at around 33.48, just under that 33.50 mark. Relatively tight range overnight, about a $40 range here, while copper futures continue to slip, as well as the silver futures continue to slip. So it's really the wind back because of that hawkish tone coming from Chairman Jerome Powell that reduced some of those interest rate cut bets on the September meeting. And also Federal Reserve Chairman Jerome Powell said that the central bank's policy settings remain well positioned, meaning they're not in any position to make any kind of cuts here. So the Fed's decision to keep rates steady, with Powell citing the labor market resilience, the above target inflation, and then the lingering unknowns surrounding President Trump's tariff agenda. So obviously the tariff agenda got unwound in the copper market. So traders really pared back the probability of that September interest rate cut, taking it down to about 50%. And we looked at October, they dropped that to around 85% coming from 100%. So basically, long story short, you go to September, it was a 66% chance that they cut rates. That drops down to 50. You go to October, which was 100%, drops down to 85. And it was that adjustment there that sent the dollar index screaming higher, all the foreign currencies lower, and the gold market really selling off. Now, slightly before that, and also to get into the silver market briefly here, that down about 3.5%. Now, if you have this December silver options, there's 117 days till expiration on it. So quite a bit of time for some things to start to reset and markets start to come back to their fundamentals and look at longer term drivers in that market. So that's why a lot of times playing the farther out options, you don't get as much volatility here, but you still have the directional bias in place. Now copper, and this is really important, so the copper market still declining overnight, down about 22% from yesterday. And where that market marks that is from that close, because this announcement and then also the Fed decision was after the COMEX close here. So it comes after that surprise move on Wednesday, which sent copper futures on the COMEX down about 22%. And it's the decision to exempt refined copper that really put a hard reset on the futures, as there's massive volumes of copper, especially that refined copper sits in warehouses. So there's plenty of supply out there. So the tariffs, they still apply to semi-finished copper products. And those are the intermediate products here. And if you look, I was kind of looking around the house, even though this is going to be mostly brass, it's these types of fittings and things like that that are already pre-made. Those are the things that were developed from that rolled copper here, and now becomes the intermediate copper that's used to create things like that. That's where those tariffs lie. So essentially what President Trump is doing is he's allowing the U.S. to continue to import without a tariff those flat copper sheets, those rods of copper, and then create things like that kind of capacity in order to spur the manufacturing and things in the U.S. So there's no real shortage of that type of copper at the moment here. So it's the sheets and the rods of copper that end up creating those finished products that he alleviated that tariff on. So my opinion, though, is the Trump administration's to exempt the refined copper from an import tariff. Yes, it came as a surprise, but the move is unlikely to alter the market fundamentals out there. And we look at things like Microsoft and Meta, which are continuing to boost the AI. That's where that data centers, that's where the larger chips, that's where the warehouses and things like that are going to continue to have some inherent demand for some of these metals here that are used in that type of process. So it's a hard reset here And what also President Trump is doing is he's now shifting to focus to get some agreements on some mineral deals here over time before, I think, reintroducing this tariff again. So there's a probability that the administration will impose some sort of tariff again on copper down the road. Now, we saw the spread between the COMEX and the LME on that U.S. front month future really drop below parity. So they went like this. There was a huge premium between U.S. copper and LME copper, and this is where the big banks and a lot of people do cite manipulation and things like that. They're trying to short one of these products while buying the other, and now that window of arb has been closed here as there's a lot of physical securing some of these different products here, and it eases that big premium and it closes out the arbitrage there. Now, the problem with the silver market at the moment is that, one, you have gold futures. They slid 1.5% yesterday. The dollar index goes up. And then remember that manufacturing side where things were getting squeezed higher from copper in that robust Asian economy. Well, now you got the copper door shutting. So now platinum down 5%, aluminum down 2%. You've got palladium down 3.5% and some severe damage done on these charts. That's why it's very important to pick and prune your positions as they move up. As we move up to resistance zone, take some of those positions off, then wait for some of these catalysts here and try and not be a hero jumping in there. Most of wealth is created through a series of consistent type of trading where a process is evolved and where prudent risk management comes into play rather than one large substantial bet and one catalyst going. Because if you have short dated options and things like that, this is where the rug pull really comes in and you see poof, the premium disappear from those particular markets. So remember, focus on a longer term process here and remember to really manage those positions back and forth. Now, why is silver continuing to sell off and copper right now? Well, you look at the European trading, well, their stock market was quite muted with one of the busiest days of earnings, but it's the miners over in Europe that are really dragging in on the index, and that's where you get the overnight bleed in the metals market. So it's really important to look at the chart pack here today and look at some of those resets and some of those larger, longer term levels of support for possible re-entry, and then using things like the tactical ranges to lighten up where the probabilities are here as far as where to exit and kind of trim some of these positions off, get you back down to more of a core or minimum position in some of these particular metals markets. Now, looking at the equities overnight, painting a completely different picture, and I had outlined bullish stance on many of these equities, specifically the S&P 500, the NASDAQ. We do have the Russell coming back here a bit. The Russell is profitless tech, and many of these companies within the Russell, about 80% of them, are really dependent on the fluctuations of interest rates. So you're going to see a similar trade-off and a similar chart pattern in the Russell that you will see something like in the gold market, a big sell-off here, but those futures are starting to come back higher and draft higher with some of these outside markets. So you look at Meta up about 11.5%, and Meta seizes its moment to spend aggressively within this AI race. You've got Microsoft up about 8.5%, and it's set to hit a $4 trillion market cap after an earnings beat. These are both types of stocks that we have within the wealth management side. And then also Bill Baruch, my partner, he'll be on the halftime show here, 11 a.m. Central Time on CNBC for the full hour block talking about some of these positions here. So we see in shares of software, cloud computing, semiconductor companies all rising in the pre-market trading. So Meta and Microsoft, they're raising capital expenditure plans. Well, now Meta, they lifted their low-end forecast for 2025 capital expenditures and provided an early steer into the 2026 spending. Microsoft said the company would spend upwards to $30 billion in the current quarter, which would be at least 50% more than any outlay during the same period a year earlier. So we will have some earnings, and this is where you want to look at your commodities portfolio as many different asset classes, because one other asset class that performed well yesterday after that initial rug pull, and if you look at what I outlined in the S&P 500, was that critical support level right around 63.80. We dropped just slightly below it before surging back up. And I said that I felt that you shouldn't use feelings, because actually Jerome Powell used feelings, the word feelings, twice. I felt that inflation might do this. I feel that we need to wait for this, rather than focusing on the data and using any kind of nowcast model. But that's getting off topic here. So if you look at these things, you're going to want to look at how does your particular portfolio and commodities respond to different developments in these markets. And you can look at Bitcoin snapping back, Ethereum snapping back, Bitcoin making new highs here just a moment ago, back near that 120,000 mark. That's why if you have a minimum position size in something like silver, where the market shoots up to resistance, you trim some of your gold off here. You start to overlay at support levels some of the Bitcoin market. You start to look at other outside futures markets like the S&P, like the NASDAQ, some of these key performers out there. And then you manage in pick and prune those positions. That's where I think you really are able to compound your results here over time. Now, looking again here at the earnings that come out later on today, we're going to have Amazon, Apple, and Coinbase. So Coinbase is the one that I'm really going to keep an eye on here, and also Amazon for how is that spending doing? How is the performance of the individual? How are they continuing to spend out there? Is it increasing? Is it decreasing? And things like that. Apple, bit of a back burner here when it comes to this. We will also have the personal income spending core PCE data coming out. That is the Fed's preferred inflation measure, and it's the key piece of economic data along with those heavy earnings. So traders will also want to eye the non-farm payroll data and that tariff deadline. They're all going to take center stage. So it's not just over for these metals markets. There's a lot of things to come. If you see the PCE data start to come down, if you see that labor market deteriorate a bit, it'll increase those expectations for the interest rate cut back in October, back in September, and you'll start to see a rug pull on the dollar index. You'll start to see a bit of a lift off again in the gold market, and you should see that silver market draft a bit higher, but wait in, buy some of the problems occurring right now in that copper market. So looking at other things here, volatility index coming down just a touch, naturally with equities going up. You also have the dollar index just slightly higher, euro slightly lower, WTI crude oil shooting up to resistance, now starting to back off a bit, dipping back below that 70 mark. And then you look at the ETF flows here. Well, they cut just a little bit, 50,000 ounces in the gold market. It was the silver. We didn't see any real material sell-off in silver ETF flows. They just barely cut at all. So it's going to be, how is today? How do they digest it? So we'll want to look at that tomorrow here, the ETF flows. And I might start with that right away, because it's going to be interesting to see how longer term investors are really thinking about what's going on in the metals market. So you got any questions? Lots to unpack. Be sure to check out Bill Baruch on CNBC at the halftime show. I'll actually be covering copper and silver on CNBC, but not until Monday. So you got any questions, shoot an email to info@bluelinefutures.com. And remember, futures and option trading, it does involve risk of loss, and it may not be suitable to all investors. Good luck, good trading.